Ben ritrovati lunedì mattina sul floor del New York Stock Exchange. Inizia una settimana più breve per le contrattazioni della borsa americana. Ricordo infatti che mercoledì non si contratta per Independence Day, possiamo aspettarci volumi ancora più bassi in queste prime giornate della settimana. Ne parliamo con il mio ospite qui sul floor, come vedete Mark Otto, che è Designated Market Makers per Night Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, we are starting this week with indexes down, a little bit of disappointment, well, I should say a big disappointment from the ISM manufacturing. We are seeing a contraction.
Yes, absolutely. We're seeing the first contraction in 3 years for here in the U.S. However, it's also a sort of snowballing avalanche effect, if you will, with global manufacturing data coming out of Asia as well. So, people are inclined to take profits, particularly off of the big rally that we saw on Friday. A lot of traders that I speak to are saying that the EU summit did cause an explosive move. And I think that a lot of it was due to the fact that shorts were probably pressed. So the volume has been pretty dismal, aside from triple expirations or days where we knew that the volume was going to be higher, end of the month, that type of thing. However, overall volumes have been low, and the market's been moving extremely more volatile off reactions.
And probably this week is going to be the same. You cannot expect volumes. It's Independence Day week. So any movement is totally exaggerated like we're seeing today. At the same time, though, manufacturing is really worrying. You're saying it's not only here in US, but it's worldwide. It tells us a lot about the state of the global economy. What do you think can happen? The central banks can now really maybe think again and intervene?
Yes, I believe they're going to definitely have to reevaluate the situation. It seems as though out of the EU summit, it can be argued on both sides. A lot of people are saying that Germany blinked and gave ground. However, I don't really see it that way. I see it as though the Germans walked away. Their taxpayers are not tied to the Southern European economies. They didn't do the Euro bonds. They are going to have an oversight committee that's going to be put in place. However, it could take as long as towards the end of this year. So it seems as though traders at first, their knee-jerk reaction is, oh, something's going to be done. However, when you look at the overall, scheme of things, the Italian and Spanish debt, it's 2 trillion euros is estimated. The ESFS and the ESM only has 500 billion euros in that pool. So I think we're far from over with the Eurozone. I believe that coming forward, China is probably going to be more and more relevant. If all indicators are that China's economy continues to slow, it seems as though most traders I speak to believe that their GDP for the end of the year is going to come in line in the high sevens. So that's estimates from a lot of the larger banks and Reuters estimates as well. So I believe the Chinese global growth machine we're going to have to see, hopefully, is going to kick on. They are making a lot of tweaks. They are trying to drive their economy from being dependent on exports to domestic consumption. However, we're really going to closely watch the macroeconomic data coming out of there going forward.
So you're saying that probably the market is going to monitor China as well as Europe, and everything is far from over.
Absolutely. And last night, several of the Asian markets were closed. So Japan was closed, Hong Kong was closed. So we're going to wait for their reaction. And as you touched upon, particularly this week, the volume is going to remain low. So there's going to be potential for massive swings. Later on in the week, we're also going to have a lot of housing data that's, jobless data that's coming out with ADP numbers and so forth. So we're going to look for a big market reaction from that as well.
And the average estimates for Friday for the non-farm payroll are for 90,000 more job. If really comes under that number, what do you think is going to happen? I mean, is the market already kind of used to it, or we can see, especially after the rally of the month of June, we can see a lot of people just leaving the market for now?
Yeah, we're in a new month now, so and we just ended the first half, so traders may be inclined to take profits off that, particularly going into the weekend. So it's coming out at the end of the week. That's also significant, particularly with the low volumes that we're going to see. So I think all eyes are going to be on that.
And of course, after that, we can talk about and what now. There are only, I believe, four job reports before the election, before the presidential election. So it's very crucial. It's going to be monitored so crucially.
Absolutely. It's become more and more important in this administration. It seems that initial jobless claims stay under that 400,000 mark, and we keep seeing it creep right up there. So that's going to be a relevant sticking point going forward. But like you said, there's only 4 more chapters to the end of this story. So we'll have to see what comes of it.
So now give me some levels. I mean, we already said volumes is going to be pretty quiet. Tomorrow is only half a day, but we will monitor the S&P 500.
Absolutely. Right now we're 1356. So support, you're looking at 1349, 1342, and then 1335. On the upside from here, it's 1365 and then 1375.
Thank you very much, Mark, for being with us, and happy 4th of July.
Oh, thank you.
E grazie a voi per l'attenzione, ci rivediamo giovedì dopo la festa dell'indipendenza.